Hi everyone, this is Mohammed Rohan. Hope you all are in good profit. In this video, we are going to cover buy-side and sell-side liquidity, where to find liquidity, the concepts of old highs, old lows, equal highs, and equal lows. Before diving into these topics, let's first understand swing points. What are swing points? The first thing we need to understand is swing points in the market, because this is how we determine where liquidity is resting and how smart money operates. So, let's take a look. Over here, we have a swing low. How do we determine if it's a swing low? Oh, we have a low right here with a higher low to the left and a higher low to the right. Oh, that formation makes this a swing low. Similarly, over here we have a swing high. How do we identify it? Oh, we have a high with a lower high on the left and a lower high on the right. Oh, that makes this a swing high. Why are swing points important? To understand why this is important, we need to dive into the psychology of traders. If someone is looking to buy in this area, they are likely to put their stop loss on or below the swing low. Similarly, if they are looking to sell, they are likely to place their stop orders on or above the swing high. Understanding this concept helps us identify where liquidity is resting in the market and how smart money moves price. Buy-side and sell-side liquidity. From our understanding, we know that sell stops are resting below this level. Buy stops are resting above this level. With sell stops resting below, we refer to this as sell stop liquidity. With buy stops resting above, or at old highs, we refer to this as buy-side liquidity. Smart money looks to pair orders below these lows and above these highs. Now let's jump into the charts and explore some real examples. Practice now. We are going to practice identifying these swing points or buy-side and sell-side liquidity. Looking at this 4-hour chart here, where are the obvious highs and lows? The higher time frame gives a clear idea of where the liquidity is resting. We have a low right here. This would be sell-side liquidity, because as you notice, we have a low with a higher low and a higher low on each side. We have a high right here with a lower high on each side, so this would be our sell-side liquidity. Now, if you notice, what did we just put in? We put in another swing point because we have a high with a lower high on each side, so this would be considered buy-side liquidity. Moving this forward, you can see that price takes out this high, so now I'm not worried about buy-side liquidity here. It now moves to over here because we have a high with a lower high on this side, and I'm anticipating a new lower high on this side, right? So lower high here. Similarly, we just took out this low over here. Now we have a low with a higher low on each side. Letting this continue and focusing on these swing points, we just put in a new one there. That gets taken out, another swing here. Since this didn't take out the previous low, those are now relatively equal lows, and so those are just sell-side liquidity together. Now we take out this high. If we put in a lower high on this side, this will become our buy-side liquidity, which it does. Now, we have buy-side resting here. We take that out. If you notice, we do put in a new swing low right here. But I'm going to focus on the really obvious highs and lows on the outside of the range. There we go. We reach all the way up to this high now. If we put in a swing up here, we will have new buy-side liquidity, which we do. Now we have buy-side liquidity resting here. Now we put in a swing low, and this is reaching for that buy-side up there. Now that is taken. If we put in a swing low, this becomes our buy-side liquidity, and you can see how this continues. Two types of liquidity, and those are old highs and old lows. Relatively equal highs and lows exist when you have two different swing points that are relatively equal or very close together, forming relatively equal highs or lows. In this case, or when you have highs that are all clustered together like this, those are relatively equal highs. These old highs and old lows just refer to a previous high or low where a single swing point stands out like that. Important liquidity levels. The next thing we're going to talk about is liquidity levels that I always have marked out on my chart, or at least know where they are located. The first one would be the previous week's high and low. If we look at the previous week, here is a Tuesday low, and here is a Thursday high. Why do I mark these out? It's a pretty easy draw on liquidity or a way to frame a reversal. So, looking at this, we take this previous week's high back into this fair value gap, and then from here what do? We expand higher. That is something I always have marked out on my chart. The next liquidity level I always have marked out is the previous day's high and previous day's low. I can either frame a reversal or use it as a draw. In this case here, you can see it was used as a draw, and the previous day's high was taken out before expanding higher. The last liquidity levels I always have marked out on my chart are session highs and lows. In this case, I have Asia, session high and low, London, session high and low. These can be used to frame a narrative, identify a draw, or anticipate a reversal as well. Let's take a look at some examples. Here are some examples of how using session highs and lows can work out. If you notice here, we have our Asia session low, which has already been taken. However, above us, we have Asia session high, London session high, London session low. All of these have not been reached. As we go into the New York Open, we get a move up, we take that London session high, reach for midnight, and we end up taking that Asia session high as well. Now, do we get a nice break of structure? Not really yet. There, we get some displacement down. Looking in here, do we have any sort of setup? Yes, we do. We have a 5-minute fair value gap here, and we reach back into it. We see a nice respect of that. No body closes even in the fair value gap. And then where do we go, or rather, where is our target? Well, we still have equal lows from the London session sitting right there. Here is another 5-minute fair value gap, and there we reach our London session low. So you can see how just using these liquidity levels, Asia high and low, London session high and low, New York can be framed off of that. Underscore, underscore. So then let's look at up to the next day. We will also mark out our previous day's high and low right here and right here. Now let's go ahead and watch this day play out. From Asia, it's right here. You can see Asia high being created, then being taken. Now we get the London session. Let's see what happens. There we go. We take our London session low and Asia session low, but no real displacement below here. Let's see what happens next. We start to get displacement up. We have a 5-minute fair value gap here. Let's see if that gets tagged. It does get tagged. Now, where would I want to be targeting here? Either these liquidity levels here or London session high. London session high gets tagged and we base around midnight. No closes below. We end up sweeping this low. Now, if we are going to go somewhere else, we've already taken session highs and lows, but what do we have left? Previous day high and low, so as we start to expand up, we get a move to the previous day high, taking out that liquidity level, displacing over it, and then we continue higher. Hopefully that shows you how to use liquidity and what important liquidity levels you can mark out. If you don't know what to mark out, the indicator used in this video is, and that's a wrap for today's video on buy side and sell side. Liquidity. I hope you now have a clearer understanding of where liquidity rests and how smart money operates in the market. If you found this content helpful, don't forget to like, subscribe, and Rohan Forex and hit the bell icon so you never miss an update. Drop any questions or thoughts in the comments below. I'd love to hear from you. Thanks for watching, and I'll see you in the next video. Happy trading, and may the profits be with you.